Hi folks, today we're going to be looking at the process of closing out our temporary accounts. So just a quick review from the theory, or of the theory rather. The temporary accounts are all of the ones that are open just for the current fiscal year, and typically they track drawings, revenue, and expenses. So all these accounts we will be closing out today, or just really bringing them to zero. So we'll just kind of differentiate those down here. We'll just kind of highlight them. So the one thing you want to really make sure you do when you start this process is to make sure you figure out where the cutoff line is, and that is usually where the capital account is located. So typically everything above from here are permanent accounts that will go into our post-closing trial balance. Everything from there below is going to get closed. The one thing to keep in mind in this case, we have this unearned revenue account. That's a liability account and will also go on our post-closing trial balance. All right, so let's get started. The first step then is to close our revenue account. The second is to close out all of our expense accounts. The third one is to close out what's called the income summary account, which we'll get to in a minute. And then the last one is to close out our drawings account. So to close out the income or the revenue account, or in this case we only have one, so it's easy. We need a debit for $207,821, and the reason is because we have a credit for that amount. So to bring it to zero, we need to put in the opposite to bring it to zero. So we're going to go to our journal page, and this is the month of December, where all of these are on the last fiscal day or the last day of the fiscal year. So they will all have the same date. So as I said, we need a debit to our revenue accounts. So the only revenue account we have is shipping revenue. So we're going to do that. That is going to be our debit, and that's for $207,821. Then we have our credit is going to be this new account that we haven't used before. It's called an income summary account. We literally open it up just for this purpose, and then we close it right back down again. Since we are debiting our revenue account, this is going to be a credit to the income summary account for the same amount. And the explanation for this is just to close the 2004 revenue accounts. Good. Now, to kind of show how this all fits together, we are not going to do the GL postings for most of these entries. We are going to do them for all the income summary accounts, just to show how that process works. So I'm going to go to my income summary GL, and again, this is my first entry here, so I'm going to put in December and then 31. I am closing, same thing as before, I'm to close the 2004 revenue accounts. And this is from page J2, and in this case I had a $207,821 credit, so it goes in the credit column. Starting out with a zero balance, I'm adding credit, so that means my new balance is going to be a credit balance. Very good. So this is account number 399, so I'm going to go back to my journal page, and I'm going to make sure there that I put in 399. So there we go, step number one. Now step number two, going back to our worksheet, we have all of these accounts here that we're going to close. They all have debit balances. So what we're going to do is we're going to process one credit entry to each of them, and then for the amount that's in each, and then one for the total as a debit, which is down here, the total, to the income summary account. So that's going to be the balancing entry. So we're going to go back to our journal page then. And again, we're still in December, so we don't repeat that. We do put in the date. We are debiting our income summary account for the total, which is 147,184.91. And then just to kind of save time a little bit here, I'm going to actually copy and paste. I know it's kind of cheating a little bit, but just to kind of keep things moving along here, I'm going to put in this. There we go. Okay, so we have those accounts, the same amounts, just in this case they're credits to bring them to a zero, and then we have our explanation. So once again, we're going to take this debit entry now and we're going to post it to our summary account. So this is for the 31st. We are closing the 2004 expense accounts. J2. In this case, we have a debit. So now what's important to realize here is that we have a bigger credit balance than the amount of debit that we're having coming in. So that means we're going to have a credit entry, or sorry, a new credit balance, and that is going to be for 60,636.09. Now that number should look really familiar because we calculated it already on our worksheet. That's the amount of our net income. So we're going to capture that now, and that's actually the amount that we're going to put into our capital account in order to balance out our balance sheet after all these accounts are closed. So once we're done that, we got to take our 399, go back to our journal page, and put our 399 in there. All right, so that's step 2. On to step 3.